Is the real estate market going in the tank again? We're going to talk about why it is or it isn't, where we're headed, and how this impacts you. Hey there, we're Bret and Molly Chance with Texas Home Life Group at Keller Williams Realty, and we've been going to several classes and listening to the experts in the last couple of months. So where is this crazy real estate market headed? What's going on? There's been some changes, so we've dug deep, found the numbers, got the information. We wanted to bring it to you so that you can make the best decision for you and your family, whether that's staying put, moving, what you need to do.
Yeah, because I know there's a lot of uncertainty right now as the market is changing again. And a lot of that's due to several different factors. One, the stock market's been going up and down, really crazy in the last half of 2018.
Right.
We're also, not seeing the multiple offer situation that we were seeing for the past few years of, getting multiple offers within the first 12 to 48 hours of home hitting on the market. We're also seeing that homes are starting to sit longer on the market than, a day or two. And, the other part is, there's starting to be a lot of negative media attention that are just taking snapshots of what the market is doing, and they're not telling the whole story. So that's one of the reasons we're doing this. We want to tell you the whole story to give you the basis of really what's going on. So that way you can see we're going back to a more normalcy of a market.
Right, because when we just take a snapshot, we're not seeing the whole picture. We don't have the actual correct information to move forward.
Right.
Because what if you're wanting to move and you're hearing the media and you're like, oh no, not right now because we're about to bottom out. That we can't do that.
Right.
So we just really are coming from a place of, for ourselves, we want to know what's going on to make that decision. We're talking about moving right now, so it's like, we're looking into it as well. Is this a good time to move? What's going on? Where are prices heading? Looking at the whole picture. So let's dive in.
Yeah, let's do it. So just, really, looking at the whole big picture. So, like I remember in school, I had a history teacher say, you need to learn your history. So if you don't, you're always bound to repeat it. And that's so true. So when we look at the market back, during the Great Recession, the home builders were blown in and going, and then the Great Recession hit and they stopped building. Because generally home builders build about 1 million homes a year nationwide. And when the recession hit, they dropped down to like 300 some odd thousand starts a year because of the lending guidelines from the big banks that just totally had dried up. There was no money there. They were not, if they did, they were not releasing it because they were like, it's too shaky with all the fear that was going on at that time. And then the other part to that caused our housing shortage that we went into, because since the builders stopped building, the population kept on growing regardless of what the economy is doing.
Right.
So where the builders were only building 300 some odd thousand a year, that dried that market up. Well, then we saw a lot of foreign investors in hedge fund companies buying a lot of the foreclosed properties, betting on that as real estate investment on their side of it. So that caused the home shortage as well, where we were not having the bank foreclosure properties coming on the market after we started to figure what was going on at that point. And then the other part of that is, we had super low interest rates, historically low. I mean, people were refinancing their house at 2.5% or maybe a little bit less. So they were decided, hey, let's just stay in the house. Let's get the house paid off. And that way that part's taken care of. We can save our money and we don't have to move. So that dried that section of that up. Because, when we had the housing shortage, it was a supply and demand effect at that point, because where it got to the point we didn't have enough houses, then that's when we really started to see the home prices really take off. We saw anywhere from 6 to 10% appreciation rate for at least 4 years straight, and that really became the new norm for us, where on good years we only see about 3 to 4% appreciation rate in Texas. And that's a healthy area, so we couldn't sustain that. So now that we're seeing the market starting to cool off, we're going back to more normalcy. It's not we're going into the tank, because we just couldn't keep going the way we were going at that point.
Right, and the funny thing is, once that was our norm for a while.
Yeah.
That crazy heated market was our norm. So as we're slowing down, it's causing some people to panic and go, oh my gosh, what's happening? We're going back into a recession. It feels very strange. And yet when you look at the numbers, if you look at what's actually going on, that's not the case at all.
Right. Exactly. Because it's just the feeling of uncertainty. So then the fear sets in, and it's just like, oh no. So again, our goal is to show you the numbers, let you know really what's going on, that there's still a lot of great opportunity out there for you to take advantage of it at this point.
And for those of you that are not numbers people and you're just like, whatever, your eyes are glazing over, our purpose in this is twofold. One is for you that do want the numbers, we're going to give them to you and the information. Two, for those of you that don't care about the numbers, we just want you to know you can trust us that we're actually going out and finding out this information and digging deeper so that we can protect you in your best interest. You can trust us with that information. So that's twofold what our purpose is in this.
Yeah, exactly. Because we spent hours and hours and hours researching this, being in it, and we
on top of doing helping clients
because we can overload people real quick because there's just so many diversities. Just like any professional, when you go to a doctor or a financial advisor or fill in the blank scientist, they can overload the jargon. You'd be like, what are you talking about? So that's not
right. Hopefully people are hiring us because we are the professionals. We're the ones that are out getting educated to find out the information so that we can help them. You got busy lives just like we do. You're out working, going to school, whatever you're got your life going on. You don't have time to research all this and figure out and to decipher it all. And you're not in it on a daily basis like we are. So that's our goal here.
Yeah, exactly. So really, I guess going to the next question, as far as the real estate market is working going back to more normal of a market. Yeah, it is. And like I said, the builders are finally getting to the point to where they're giving us some relief, some choices for the buyers. In fact, we're just in a meeting with one of the largest home builders in the area this last week. And they're talking about, we're finally able to start giving the market some relief by providing the inventory of homes for the buyers to choose from, and we're seeing that. Now they're still claiming that they are behind as far as giving us that relief, and rightfully so they are, because at one point I'd heard the statistic of, even if the home builders are cranking out 2 million homes a year across the nation, they would take them a while to be able to catch up, and they're only cranking out about 1 million right now. So
it's because we have so many people moving to the area.
Because Hillwood Development Group, which H. Ross Pro owns, they own pretty much all 35W corridor between Fort Worth and Denton. Mm-hmm. They just announced with Cole Ranch and another ranch, they're going to be starting 15,000 homes in those two subdivisions, and they've got other subdivisions that they're developing of Harvest, and then a couple others have not been named that we're privy to at this point.
I mean, 15,000 homes, that's crazy.
But
what, I don't want to get you off topic here, but what is that going to do? As we see these builders building more homes, yes, that will give relief to have more choices for buyers. At the same time, it's going to put pricing pressure on our existing homeowners that want to sell.
Exactly. I mean, that's a great point, because when we were first starting to come out of the Great Recession, back in 2010, 11, something like that. Yeah. When we started to see the home pricing starting to come back up, that was when the pre-existing market could really capitalize on getting a good rate of return on their investment, because they were not competing with new construction at that point. So now the pre-existing homeowners are having to compete with the builders with great buyer incentives. Plus, it's a new home, no maintenance for your first, 8 to 10 years, somewhere in there. And so, that's just that much more competition they're having to go against at this point.
Right.
So yeah, we are seeing the pricing pressure along with seasonality timelines with there too.
Right.
But as far as the other positives, the population growth, and these statistics come from North Central Texas Council of Governments. This is where all the cities go to get their information and know how to do all their city planning for their streets and infrastructure and services that they provide and all that. Right. So their growth projections from 2010 to 2035, just for Denton County alone, is going from 662,000 to over 1 million people.
That's a 59% increase.
Yeah, and it's even getting crazier. Over in Tarrant County, they're going from 1.8 million to 2.8 million.
Wow. Which
that's 56% growth, and then Dallas County is going from basically 2.3 to 3.1%, and that's 32% growth increase.
Right.
And it's not just the Metroplex; it's all the surrounding areas, because looking at that, the counties are seeing anywhere from 50 to 120% growth, and like Rockwall County was one of the hottest counties in the area for as bed of growth right now.
Yeah.
So, it's just crazy, and the job growth is high. In fact, DFW is the largest job growth increase in the U.S. by over 109,000 new job starts. So
that's a good thing.
That's a very good thing. So to be able to support that, and also the other thing is that this may kind of seem very obvious, but households right now are less in debt now than they were back in the Great Recession. So that's a very good sign of, now that they've got extra spending money to be able to make the purchases of homes or do home improvement or whatever they're wanting to do at this point.
Well, and they're able to keep their homes.
They're able to keep their homes, yeah.
House payments and all that. So we're not talking about going to foreclosures. So that's
because the foreclosure market has totally dried up. You might see one here or there, but it's pretty much non-existent at this point.
Yeah. So let's talk about home values.
Okay. Yeah, right now, as far as DFW, Realtor.com did a study, and they're projecting the DFW area to grow by about 4.3% appreciation rate, where the rest of the nation is only going to be at about 2.2% appreciation rate. So we're outperforming the rest of the country by 2%, just because of the economy and all that is so great here.
And that's on average. We're talking, your home value is going to be increasing by that much on average across the country.
Average, and again, it comes back to the four key factors I've talked about before. It's price, condition, location, and the product or the type of property somebody has.
Right.
Because every price range is different. There's markets within markets. One subdivision is going to outperform another subdivision, or another area is going to outperform the other. So it's really locally based, very specific with that.
Very specific, very niche.
Yeah, very niche.
Yeah.
And and the other factor of that is looking at the interest rates, because right now Realtor.com is saying, okay, they're thinking we'll be at about 5.5% by the end of 2019. Zillow is estimating about 5.8. In Fannie Mae, which is the government backed who actually funds the loans, is 5%. They're saying that the highest that the analysts are talking about is 6% interest rate by the end of 19.
So kind of put that in perspective. Where are we right now?
Right now, we actually just saw them drop. They're around about 4.75 right now.
Right.
So it's still it's free money. Because when we both bought our first house, we're lucky if we got 6.5%.
Yeah.
However, if looking at the history of interest rates throughout the country, since I started tracking them, the average interest rate percent is 8%. Mm-hmm. So if somebody bought a house back in the 80s, you're jumping for joy if you got 15%, and that just seems just crazy in our minds because we've never experienced that.
We got used to 3-4%.
Yeah, and that was the new norm, was 3 and 4, and people are 5%. They're screaming about it, and I'm like, yeah, it's free, it's still free money, but yeah.
Not totally free, but
not totally free, but pretty close. So yeah.
So what does this mean when you put the home price and the interest rates together?
So as far as the Texas median price range home, just all over the state, is $185,000. Mm-hmm. Now, when they mortgage $148,000 of that, and if the interest rate's at 4.9%, their principal and interest payment is at 7.8%. $788 a month. Now, if the interest rate jumps up to 6%, their payment went to $891 a month. Mm-hmm. So that is $102 difference in between that interest rate jump of basically just over 1%.
Right.
Now, if nobody pays an extra payment to pay that mortgage down over the life of the loan of a 30-year loan, that difference is costing somebody $36,000 in 30 years just for that extra jump in interest rate.
Wow. Yeah.
So that's definitely robbing people of, putting money back for college or retirement or just savings or, different things like that.
Right. So we don't know necessarily where the interest rates are going to go. We have a pretty good idea of what they're saying. We don't know for sure. But if it jumps up that 1%, that could knock somebody out of a house that they really wanted. Now they can't afford because of that extra jump up in monthly payment.
Yeah, exactly. So if somebody wanted to have a certain house payment of X, and they're looking, for example, at a $300,000 home, well, the interest rate jumps up 1%. Well, in order to keep that the payment that they're looking for, now they're looking at a $270,000 house. They just lost $30,000 of buying power and settling for something that they may not really want or like at that point.
Right, right.
We see that all the time. Yeah, we see that all the time. Or if they say, well, we still want that same standard of living that we're looking for, so now that $300,000 house is really a $330,000 house, causing that much more too. So
right.
Different ways to look at it.
Right. That's why the interest rate is important. That's why we're always talking about that. And you wonder, what's the big deal? Well, that is why.
Yeah.
You just can't afford as much.
Yeah, exactly. And the other part of this, looking at the interest rates and also mortgage lending and the credit requirements is, people say, okay, what, are we, going back to the question, are we going back in the recession? And I really do not see that at this point. I really don't, because one of the main reasons that we went into the Great Recession is because the government in 1999 decided, hey, anybody and everybody should be able to afford a house whether they have a job or not, basically. So they said, okay, they came up with the state aid income loans. So you could be able to say, yes, I make X amount regardless whether you were or not.
Sure, I make
$300,000 and I can afford that $1 million house till the first payment. But anyway, that's a whole nother story. So when they did that, it really upset the apple cart to setting it up to where in 2008 and 2009 the dominoes fell. Yep. There's a great movie that really explains it. It's called The Big Short. Yep. Kind of foul, but the education of it was really good. Really explained what happened as far as selling the bad loans and things like that.
There was a lot of greed involved, unfortunately.
So so a lot of greed, because the thing of it is that when the real estate market basically kind of gets a cold of not doing that well, the rest of the economy is really affected to where basically like they get the flu, because one real estate transaction just really affects so many different areas of the economy, because right. When we do one transaction, we're touching at least 27 different industries of trades that are involved in one transaction.
Right.
So there's that, and even FHA has come out their annual report saying everything is very strong. Another indicator that things are very strong is Fannie Mae, Freddie Mac also increased their loan limit on what they call a conforming loan, meaning that's their loan limit of what they're willing to do before they go into a higher level of loan limits. And it's the first time in 10 years that they've done that, and they've increased it by 6.9%. Yeah. So that is a strong indicator that we're heading in the right direction continually. Right. So yeah.
So what about credit scores? What's going on with that?
Well, I mean, as far as credit scores, the average or the price, the range of credit scores anywhere from 620 to 719. A lot of people that I talk to are looking at buying. They're like, well, we're not for sure about our credit score. So I'll ask them, hey, have you even had it looked at? Right. Because they're thinking if they're around the 650 mark or something like that, that they're not within the ballgame, and they are. Right. Or even in the upper sixes. That's basically where the normal is. Just because somebody doesn't have an 800 doesn't mean that you can't buy. You definitely can.
Right.
with that being said.
Exactly. So let's talk about one of the biggest issues with the real estate market, and that is the press, the media.
Yeah, it's kind of like the whole term, the fake news. Well, I have to go with that. But anyway, because here's the deal. I mean, the truth of it is, the press's business model, if it bleeds, it leads. So the Wall Street Journal actually just came out with an article a couple months ago saying that the U.S. Housing boom is coming to an end starting in Dallas. However, I think they're doing that just to sell papers, because the graphs that they're showing don't support that at all. It totally contradicts it. And the reason I say that is because they're comparing with 4 cities and the rest of the nation. So the 4 cities they're talking about is Dallas, Denver, Seattle, and San Francisco, and then the rest of the nation. And the 4 trends that they're tracking, the first one is housing starts for single family. Dallas is leading on the number of housing starts, and even the home builders are saying we're actually going to be starting a couple hundred more homes than this time we did last year. So that's very strong. The inventory change from this time last year of the 4 cities, we had an inventory change of about 14%. Now, if they're saying Dallas is leading it, San Francisco hit 41% of a change. So I'd be more concerned if I was in San Francisco than I would be in Dallas, for sure.
Right.
And then as far as the 3-month of sales change in the year, yes, I'm not denying this, that because this really came out in October. We saw the dip in things in the market, and a lot of that was just because of the midterm elections. And we see that every time a major election comes out, people get fearful, they pull back, and that's showing in the numbers. So I believe they're picking up on that aspect, because again, it's just a snapshot of what they're looking at.
Right.
To say all that, where is the opportunity in DFW in this area where the home starts are on the rise from the builders by about 36,000 homes additional this year, coming up for 2019. That's going to be putting a little bit of pricing pressure on the existing home market. So, right now, where the builders are still trying to keep up with the demand, if you're looking at selling right now is a great time to do it, because it's that much less competition you're having to compete against. Plus, on the buy side, you're still getting a super great interest rate, around that 4 and 5% interest rate, which is super low interest rate, right. And you're saving money on that end. Where right now the projections are telling us we're going to be seeing about another 4% increase on home prices, which, that's more of a more healthy. Now is a great time to be able to, move close to the family. Yeah. Or consolidate families, which right. We're seeing that a lot of too. Right. Or if somebody's needing a job relocation or things like that, now is a really great time to do it.
Yeah, totally agree. From everything that we've been seeing, still a great time.
Yeah, exactly. So really, if you have any questions, feel free just to reach out to us. We'll be more than glad to visit with you. Whatever we're going to do to help you out, just let us know. I appreciate your time.
Hope this was helpful. See you guys later.